That's a first. I'm Richard Titus, AKA Titus. I've been a serial entrepreneur. I founded, I don't know, I lost track. It's more than 20 companies at this point. The most famous of which was Razorfish and a company called Schematic, which are the two of the biggest agencies in the world. I founded a company called ARC last year with my partner Marissa. We are a crypto merchant bank is how we describe ourselves. Google merchant bank, and you'll understand how many times we had to do that to figure out what to call ourselves. So we essentially, we have a capital markets business and a direct investment business.
I'm Gil Penchina. I've only started 5 or 6 companies, so I'm feeling a little intimidated. But I invested in about 300, and then more recently a bunch of crypto companies. Some of the better known ones being like Ripple and Civic and EOS, and then advised a few, and am now sort of just trying to hang out and deal with the storm of the latest crypto craziness.
That's very impressive. A few people came up to me before the event and were just so interested to getting to know you guys better. Can you tell us more how you started this pathway? Like, how did you get into angel investment? Like, that seems like a crazy thing to do.
Yeah, it was actually really easy. So I was one of the early folks at eBay selling Beanie Babies on the internet. And when I joined, it was like this really cool, hip startup full of cool, awesome people who were fun. And a year and a half later, we were public, and everyone there worked at McKinsey before coming to the startup. And I hated everyone I worked with pretty much for the next 5 or 6 years that I was stuck there. And so angel investing was literally a way for me to get to hang out with the people I liked instead of the people I worked with. And so I would have like startups coming through the office constantly during the day, trying to hide from meetings I was supposed to be in.
So actually, this is really funny. We had the same story. So I founded a company in LA called Tag Media. It was bought by Omnicom and then rolled in with 2 other agencies to form Razorfish. And we then hired a bunch of people from A.T. Kearney, who I detested, and one woman from McKinsey who I hated even more than the A.T. Kearney people. And so I was just in LA at the time. There weren't that many startups, but I basically became the, like, for sure, they called me 10K Titus because I would write 10K for almost anything. Literally just because it was an excuse to get out of the office and throw some money away and get involved with other startups.
I will say, because I did a lot with AngelList, if you talk to most angel investors, making money never makes their list. It's always like, I want to give back, I want to be a baller, I want to be on board someday, I'd like to be a VC. This seems like a way to learn how to be a VC. But, you know, intellectual curiosity. Like, I used to interview like hundreds of them, and almost never did you hear like, I need at least an 8% return on my money. It was amazing. And that's why they call them angels as opposed to VCs who are actually in the business of screwing you.
Oh, that's pretty cool. So can you guys tell us, like, how do you pick the right ones? Let's get to the bottom of it. Like, how do you know out of 300 which one is the right one?
All right, so I actually, it's because we're in the middle of raising a proper fund now at ARC. So I've been going through, I actually can talk about it now because we're not quite licensed yet. So I've been looking at my past performance. So my 2 best performing investments, actually I think Ed, who introduced us the first time, might know at least one of these. So I put a chunk of money on accident in Facebook. That's the story. I'll tell the story in a second. And then the other one was Tesla Motors, which is a pretty obvious one. The 3rd best one is actually Coinbase, which is Brock Pierce made me do. I did not believe in the company. I was really not sure this whole blockchain Bitcoin thing was going to work out. This is, 5 years ago, 6 years ago. But Brock literally was like, you can't come in any more of my parties if you don't invest in this company with me.
Good point.
So the ones I was most excited by, and I looked through all my notes, you could see like scribbles in like the margins of the investment documents, were always the turkeys. But what it was is the ones that were really successful came through my network, through people I trusted. When I met the teams, I was blown away. So if you look at the notes of Tesla, it's like, holy shit, it's an electric car. That's literally what it said in the margin. And so I've sort of decided in my old age to just really bet on things that are mind-blowing. and sort of forget the sort of traditional investing thing. That's probably a bad idea, but that's what I'm doing these days.
Yeah, someone said it's just as hard to start a shitty Me Too company as it is to start a really interesting one. So I mean, there is the Tesla sort of argument of do something that's really mind blowing, because frankly, then it's easier to recruit, it's easier to get PR, it's easier to get a lot of things. So that seems like one. Another sort of Silicon Valley truism is like, the three hackers living together who are all programmer bros. And I was going back and looking, I'm in about 6 or 7 billion-dollar companies. One of them was started by a Rhodes Scholar whose last job was government relations. That was called LinkedIn. Another one was started by a hedge fund manager who got in a lot of trouble at Stanford Law. That was called PayPal. There's one started by a comedian down in LA called Dollar Shave Club. So, not all these truisms are truisms.
They're all people, right?
They were all really intense people, except the comedian. He was just weird. So, I mean, another way I say that, I would say it's a lot easier to come up with what not to invest in. Like, I think we're actually much better at telling you what to avoid than we are at telling you which one's going to be awesome, because there's way too many things you can't control in that. And I tend to avoid people who are focused on status because the job sucks. So I met a guy and his business card said founder, CEO, chairman, and president of, and I was done. Because like the job sucks, and the first 5 years, everyone thinks you're a loser and makes fun of you. So don't go into it if you need to be cool at cocktail parties or you have a big ego, because people are going to beat the shit out of you. I don't like people who have good options, so I tend to stay away from the Harvard MBAs because they can always quit and get a good job once they realize this is a bad job most of the time. So you're looking for people who are a little crazy, right? The kooky, nutsy people like him. Because, they won't give up when things get shitty.
Cool. So I hear a couple of things. Taking notes here. First, partying gets you to angel investing. Is that right? Maybe. Second, focus on the team, which makes sense, and pick mind-blowing projects. Is there anything else to it? I know, Gil, you talk about what are they? Picks and shovels. Yeah. Like, can you elaborate a little bit more on that?
Well, picks and shovels is just the old adage of, who got rich in the gold rush. It was Levi's, because they sold a lot of jeans, right? So, in the internet, picks and shovels was Cisco and EMC, and then in crypto, it's Ethereum, which is sort of the transport layer for everybody else to use. And, so but increasingly entrepreneurs have learned that investors like words like picks and shovels and platform. And so everyone I talk to now has a platform doing picks and shovels for delivering cookies in 30 minutes or less. So, it's hard to sort of tease apart what is actually going to be a platform before it becomes a platform.
Right. I mean, I'm not going to reiterate what you said. In the crypto space, because I think there's a bunch of people here who are really focused on crypto, we're focusing on a couple of areas. So the first area, frankly, is the application of blockchain for real business problems. So sadly, she had to leave, but one of my portfolio companies, Electron, is using blockchain for trading in energy. So this is PUC. This is like the most boring sector ever. And before blockchain, this was fax machines and telephones. And so that's a really interesting opportunity in a multi-billion-dollar business. And the founding team actually are all ex-McKinsey, funny enough. But there's 2 founders in there that have never had a proper job. That's why I bet on them. We have a company called Securency, which is a bunch of ex-CIA, FBI guys who do a back-office white-label solution to turn any exchange into a security exchange, which is actually kind of important since there's 4,000 utility exchanges that all have to become security exchanges. So that felt like a pretty good bet. And actually, we bet in a company which is just about to do the token sale now called MetaCert, which is a security anti-phishing solution, which is, I think, one of the biggest problems in crypto is security, and no one's really thinking about it. So, we're looking at things that solve real problems, either today or problems you can see on the event horizon. And then I still bet on crazy shit like, you know, energy and electric cars and clean water just because I'm a nerd.
So can you tell me a little bit more about your successful exits? Like, what's the ratio between the number of investments? Like how long did you have to wait until you can exit out, or did you feel like it was going to grow further? Can you elaborate more on that?
So you've had more exits than me, I think, but over time, when I look at the businesses that had proper exits, I mean, the Facebook one I'll tell actually because it's kind of an interesting story about liquidity, and it was actually my first time I really understood the liquidity problem that crypto really helped solve. So a friend of mine named Selena Chow, please don't tweet that name, works investing some money in a company called And so I was living in London at the time, and I had to go through this whole KYC process, which was even worse then than it is now, because this is before really scanners really happened, so it was all fax machines. But I eventually got an account. I logged in. I looked around. Because I lived in London, the only thing I heard of on second markets was Facebook. So I bought the smallest chunk of Facebook I could find at the $1 billion market cap, which was, I think, 20K. So it was double my usual 10K, Charlie. What was interesting about that is later, right before the IPO, I dumped the whole position. I don't care. And so there's two lessons there. The first one is that liquid market, which is what security exchanges and exchanges in general and crypto taught us, is that liquidity really matters. It allows you to move in and out of the position based on your assessment of how the business is doing is really key. The other thing is, by selling before the public event, I actually made a lot more money. I would have had to wait 5 more years to get that same return on capital. So,
Yeah, I mean, crypto is different, right? So the average tech startup, statistically, the math is it's about 8 years on IPO. Now, some of them get bought before then, but you know that's the math. You know, my average crypto investment I've gotten out of in 6 months, which is kind of crazy, and in many ways super unhealthy too, because it means people are, you know, trading on your stock long before you really have anything to trade on. So there's a bunch of weirdness to that that's super fun.
So can we talk more about that? Is there danger to that? Like, and is it all about like the market trends? If the market is going up, then any of the, you know, ICO, like any of the security project going up, or is there more fundamental analysis that one can do?
He's the banker.
I'm only a banker in name. So here's what I'll say. I, like Gil, got in this initially probably from some of the same people, more from a curiosity standpoint, and I was surprised that you could get in and out of these positions so quickly. A year ago, Marissa, my partner, and I did a panel in Hong Kong, I think, and we said, we believe a year from now, security tokens will be dominant. And I would argue that we were almost right. It's happening as we speak. So there are, of the projects that come through my office, 0% of them are utility tokens. They are all security tokens. And so what that means is the marriage of going public and a security token offering are slowly melding to be the same thing. And so arguably, and this is a really arguable point, but I'll say my new prediction, which is in 5 years, there will be no difference between a security token and a public equity. They will be the same thing. And between here and there is the bumpiest, craziest, curviest roller coaster ever. And you know, buyer beware on the one hand. On the other hand, this is how fortunes are made, right? So the time where suddenly capital raising becomes democratized, at the same time data actually can be more public, right? All the rules that sort of we constructed the public markets on are changing. But between here and there, there's going to be a lot of scams, there's going to be a lot of fraud, there's going to be a lot of bad deals. But overall, I think it's better for the markets, I think it's better for companies, and I think it's better for investors.
So I advise a couple of folks, Cointopia and Polymath, who are both trying to become brokerages for these sorts of security tokens. And you know, it's interesting because I also day trade stocks, and I can do that 8 hours a day, roughly 240 days a year. And then you start playing around with crypto, and you can trade at 3 in the morning on Saturday, and you know, on Christmas Eve, and you know, all kinds of other freakish times. And once you start playing around with crypto for a while, you end up having sleep issues and getting alerts at 4 in the morning about something that happened. And I literally know people who, like, they haven't slept in months well because they're just, you know, the beeping keeps going off of, like, my currency just went up 20%. And so it's, or down to, no, it depends on the week. It depends on the week. And so there is something really interesting about a global 24/7 capital markets infrastructure that's been built without anyone really paying attention to it, including some very strange things like Bitfinex, which lets me offer my money as margin loans to other people and earn interest instead of the bank. Or I think it was OKX, which now has collateralized shorts where if someone else can't pay, everyone else has to pay for you. Like some really bizarre financial instruments that people, I actually one on my to-do list is to put together a spreadsheet to understand what the words I just said mean in math. Because a partially collateralized 20-to-1 short position is really weird. And I don't know if you know more about that.
You know, I was just going to say, like, so he called me a banker before. I just want to say I dropped out of 5 of the best colleges America had to offer. And just for good purpose, I dropped out of one of them twice. That's UC Santa Barbara. So I have no degree. I certainly didn't go to business school, although I did attend quite a few, and I lecture at them quite often. I'm a joiner. I'm not a finisher. But what's interesting is this idea of collateralization, the idea of, you know, if you learn, there's a great movie, a book everyone here should read, by the way, called The Ascent of Money by Niall Ferguson. I knew Niall when he worked at the BBC with me. He's an amazing man. The book is fascinating for someone like me who knows, excuse my French, fuck all about money. I didn't know any of that. And it really was a great introduction to the concepts of, you know, tokens or of derivatives and leverage and these kinds of concepts, which are things that as an entrepreneur you learn in practice but not in principle. But what's really interesting about tokenization, less so decentralization, but the idea of tokenization is that, for instance, Electron, you invest money in equity in the business, but you also make money as rent out of each of these exchanges. And so it's both in our traditional terms, we would use different words to describe these functions that all exist in this one unit of ownership, which is a really interesting idea and pretty cool. So I could, for instance, raise money to back the Titus mortgage of my new house in Pack Heights and say, look, I'll pay you this much money in return on capital. However, if I don't pay, you get this accelerated percentage of the return on capital when I sell my house. That kind of destroys a whole chunk of the mortgage market that's designed to screw people like me.
That's actually an interesting point. I mean, there's all these different type of tokens, right? So that I've been talking to someone about a membership token, and people are like, "What the hell is that?" I'm like, you know, it's a unit of 1. You can't get less than 1, and
Battery.
Yeah, like you literally make your battery membership tradable. And if like someone else thought it was cool, would they pay you more for your battery membership? Which I think is super cool. And then you could have memberships where if you get 5 tokens, you get VIP access or something. I mean, there's like all these different weird software things that can be built into it that people don't talk about typically when they're talking about the Bitcoin. You know, the smart contract stuff. I mean, I'm trying to think, what other innovative tokens have you seen that do weird shit that's cool?
Well, I was going to say, so we just launched a product, and I'm not marketing it. It's just kind of an interesting idea. So in crypto, those of you here who've done an ICO or been involved in crypto for a while, you run into this problem, which is custody, right? So I've got a bunch of crypto on like a ledger and a Trezor. They're in my drawer. If you come to my house, you could steal them. You'll probably get my money 50-50. But if you raised $100 million from investors, particularly in Eastern Europe, you really do not want to lose that money. And no bank's going to take that money. And so a bunch of businesses have arisen who will do what's called custody. They'll charge you a couple basis points. Usually it's like up to 1%, sometimes 2%, to hold your money. And so We, in partnership with Abra, which is one of our portfolio companies, have set up a product where instead we pay you a small bit of interest on that money. Because we use smart contracts to both secure the investment and to pledge it against certain collateral transactions that require collateral but have no risk. So, well, in aggregate, in aggregate, no risk. I can walk you through the math of why, but it basically gets down to de minimis. The interesting thing about this, though, is that that's a function that you used to have to go to Goldman Sachs or Morgan Stanley, at which they would charge a very large fee, because there's all these people that had to go do the modeling and the actuaries. That's all done in software. And so these are the things, these businesses where you had intermediaries sort of blocking markets or clubs where you had to get in to get access, those are the ones that will suffer first, which is kind of interesting, but also where opportunity exists.
I'm done.
So it seems like there's you guys do quite a bit of like the open exchange, like public market trading. Can you tell me how much time you dedicate to that versus like private sale, private investment? And those are harder to get access to. So I'll have a follow-up question on that. But what's the percentage of time, and how do you know like how to split it up?
I don't spend a lot of time public market trading because I don't think I know anything that everyone else doesn't know. Occasionally I'll see that all the self-driving car companies and all the cloud companies are buying NVIDIA chips, and I'll go buy some NVIDIA because like it seems like everyone's going to use them. The crypto trading, although, is super addictive and really unhealthy, and almost everyone who gets into crypto ends up at some point sucked down this rabbit hole of like the 2 a.m. alerts. And
Vacation's ruined.
I mean, and it's just, and it, so we haven't seen those sort of market distortions in a while, but last November I did something like 7,000 Bitcoin trades in a period of about 3 days, and literally like just lost 3 days of my life.
How much money did you make or lose?
I ran to B of A to wire all of my money to Gemini over and over and over again during those 3 days because I was looking at, there are two regulated US exchanges, Gemini and Coinbase. They're the only two. And there was a 7% discrepancy in the price of Bitcoin between the two of them all day long in November. And I was just staring at my screen going, pigs are flying, that makes no sense at all. It's $17,000 for Bitcoin here and it's $16,000 for Bitcoin there. That's gotta go away. So I started trading and it didn't go away and I ran out of money. And so I literally was running to the bank over and over again, wiring money to one, getting the money out of the other, running to the bank again. And like 3 days of meetings disappeared. Like I just forgot because it was so weird. And then I got my 15-year-old son to write hedge fund trading software for me so that I could start automating this. And then I was getting pager alerts every time it happened. Got down like 2 or 3%, and which was still enough to trade on. And then by January and February it was gone. But there are people who literally trade shit tokens all the time that, you know, go between 1 cent and 2 cents, and every time it goes to 2 cents, they sell it. When it goes to 1 cent, they buy it. There's whole software packages now that track all this stuff, and so it's super addictive in the same way that day trading was super addictive in the 90s when E-Trade first came out, and everyone I knew here was day trading. So when you get into it, realize it's A, not going to last, and B, it's going to ruin your life and stop at some point.
So, like, very similar to you, I fell down the wormhole. It sounds like in approximately the same 45-day window. It was super cool. Sadly, I decided to hold on to my crypto until after I came back from my January ski trip. Because the tax, you know, capital gains, figure I'd save the saving. And so my treasure was in my drawer here, but I wasn't. Ouch. So what that taught me is 3 things. The first thing is I'm dyslexic, so I really try and not trade because I for sure will screw up either the price. Yeah. So for sure, not good. And the second thing is we now have started working with a portfolio of traders that we stake like a prop fund. And if you don't know what that is, it's one of these things I just learned about this year. It's basically you meet a trader and they pitch you a strategy. Watch the TV show Billions if you want to know how this works. And then you say, okay, I'm going to stake you, and we put up to 50% of assets in their fund. They have to bring the rest from somewhere else. And they trade on our behalf. And what I found is those guys always trade exponentially better than I do because they're focused is what they do. And if they don't, after 90 days, we cut them, we find someone else. And we have a small pool and growing of these guys around the world. Many of them are people who would never get a job in the real world. I mean, one of these guys I met in China was wearing bunny slippers. You couldn't make this up. I was like, this is the pitch meeting? Awesome. He has, by the way, outperformed the rest of the traders by about 10x.
There was also a point where the Chinese and the Korean markets were a good 20-ish% higher, largely because of capital controls. You couldn't easily get money from Korean won or Chinese renminbi.
Bitcoin right now is $22,000 in Venezuela.
Is it 22? Oh yeah, because really, I would have thought Brazil. Interesting. Venezuela has the same capital controls.
Actually, Venezuela's going bankrupt, so
Okay, everyone's trying to get the money out. So there was a point where I had a guy in Korea, because they have capital controls, and we would send him dollars, he would turn them into Korean won. I'm sorry, we'd send him Bitcoin, he would sell them, get Korean won, and then we would buy Samsung semiconductor chips, because they were lightweight and expensive, fly them here and sell them to a company I knew that was going to buy them anyway. And so we were round tripping, you know, buying Bitcoin here with the Samsung money, sending it to fucking Korea, trading it, buying chips, muling them back like drug mules on this fucking plane, dumping them here, getting cash, starting over again. It's like, this is like the shit that gets people super addicted.
This, by the way, is why cryptocurrency will win, right? Like, for sure. Like, I had this problem. I live in the UK. One of my best friends moved to Colombia. He married one of my friends who's Colombian. Every time I go to Colombia for the last 10 years, he'd say, bring me $100,000. And literally, he would wire me from his account in Australia, $100,000, and me and all the people who were traveling with me would each bring $9,000 in our bag and give it to him because he couldn't get the currency in the country. That's nuts, right? That is absolutely crazy. But this is why a digital programmable money is for sure the future. The problem is between here and there, as we've talked about before, it's going to be a very bumpy, crazy ride. So Venezuela, I just mentioned, is $22,000 Bitcoin. That was last week. Zimbabwe was even higher last week. So anywhere there's financial insecurity, cryptocurrencies go up. I would argue the dollar may not be far behind.
What are Venezuelan exports that are worth? Sorry, that's a different topic. Oil, yeah, buy some oil there and mule it back. Yeah, it's going to be hard. It's too expensive. But actually, let me highlight something Richard said, which I think is interesting, which is I think capital markets have been an interesting area of innovation for blockchain. If you look at where blockchain has actually worked best, it's in things that people in the industry call censorship-resistant products, which is a fancy word for saying things governments want to shut down. Seriously. Like the best crypto projects to date have been doing things that make governments very upset, because it turns out people in Venezuela and China and Korea want to get their money out. And it's not easy to get your money out of China. And so guys in China were buying mining rigs with Chinese renminbi, running mining and getting their Bitcoin out into the US and converting it to dollars. And they were willing to take, I don't give a fuck what discount to get their money out of renminbi. Similarly, all the people early on who were buying drugs with Bitcoin were doing it to avoid censorship or government, policing, right? That's largely subsided as all the crazy entrepreneurs have come in. But, those are examples of use cases where literally censorship resistance is the main reason it works. So one of my favorite stories in the last couple of years where I was like, okay, that actually sounds like the good one, was Steve Waterhouse at Orchid, who was like, I'm going to build a censorship-resistant internet, and we're going to launch it in China. And I was like, that sounds fucking horrible. I'm in. Like, let's do that. That sounds like everyone's going to be mad at us. Like, I don't want to work with you because I don't want to go to jail, but like, you should totally do that, and I'll give you money.
So actually, true story, and I was going to tell this one, but since you brought that one up. So the way I got into Bitcoin is Brock Pierce actually gave me 10 Bitcoin. Right, for investing in Coinbase, which when, so when Bitcoin hit $1,000 the first time, I was like, dude, break even. I didn't really take it very seriously. I was a huge crypto, they call it a cypherpunk, so I'm really into cryptography. I've been really, really deep in something called eCash, which you should for sure Google. It only worked on Blackberries. I wish I still had mine because I have some on it. And so I just thought this was going to be an interesting step on a journey to digital money that would for sure be made by probably the US government, maybe the Brits or the Swiss. So I didn't really take it seriously. I had a miner running that paid my hosting bill in the UK, which I thought was kind of cool, free hosting. So I for sure paid about $2 million for that hosting over that period of 2 or 3 years. But in that period of time, my friend Michael Turpin had this event in Las Vegas called Coin Agenda that he started, call it 5 or 6 years ago. And I used to be a judge semi-regularly. They called me the Bitcoin bear because I was like Simon Cowell, where I'd be like, you have no go-to-market, you don't understand your customers, this is never gonna work. He liked having me there. I like going to Vegas for free. It all kind of worked out. I don't drink, sadly, but at one of these events, Michael pulled me aside. He said, hey, there's this guy I want you to meet. His name's Vitalik. So I met this kid with a shaved head, weird Russian accent. And the first 5 minutes of the pitch was pretty good. We talked about decentralization, we talked about cryptography. I knew some people in the space, we kind of nerded out about that. And then he got excited, and he started to explain how his technology allowed the overthrow of most of the major Western governments, at which point I said to myself, meeting over, and there's no chance I'm giving you any of my hard-earned money. And so 9 months later, I bought Ether at $3. Still pretty good. But the thing was, and I tell this story for a reason, not just because I met this crazy, interesting guy. The crazy factor, going to our point, I now would bet that guy because I understand that crazy is actually a perfect proxy for brilliant sometimes. The other thing is the way he should have pitched it to me was very simple. JavaScript for blockchain. It's essentially this idea of a programming language and a very simple programmable element to sort of a blockchain-based currency. That made a lot of sense to me. And the minute Brock pitched it to me like that, 5 months later, I bought. So.
But it's a good point, right? So the other thing that's going on that they don't talk about a lot is there's probably 50 crypto billionaires at least at this point who can't get $1 billion out of crypto very easily. So they're going to be in for a while, no matter how much day trading Richard and I do. And so they are placing bets on things that expand the ecosystem because they want the ecosystem to survive, right? So they're like, if you can come up with something that makes crypto stronger, I will give you money because I don't give a fuck if it works or not. I want one of these things to work to help my crypto, stay awesome. Until you go to China and Korea and, various places in the Midwest and find these strange people who are doing, who are literally like, a little bit like you were saying, they show up with a backpack and they haven't showered in a couple days. And
they're checking their prices on their phone.
I had one of these guys, he showed up at my house, heard the pitch for Prize, which is a couple of folks from Prize in the back that I was helping at the time. And he's like, it's very interesting, like, what's your fundraising strategy? And I was like, I don't know, we just like money, we don't really care who it's from, so first come, first served. Like, and fuck you and your like value-added bullshit. I've been an entrepreneur for a little while, so and he's like, oh, okay, and he sends me $2 million worth of Ether while he's in the elevator going downstairs. And I was like, we should probably sign something first. And he's like, yeah, we can, whatever. Like, we'll get to that. Like, I was just like, you people are fucking crazy. Like, that's not okay. And by the way, awesome, good job.
So I hear a lot of craziness, and I hear some hustle. Like, you guys actually had to do a lot of hustle to get that money out or pipe it in, and like watch those, those exchanges go up and down with the prices. But is the hustle the same for the private sale, like for the private tokens? Or is it as simple as like, oh, I have my network and I know there's some smart people there, there's some crazy people there, or there's some solid investors that I can talk to and ask for advice and just kind of follow the trail?
I'll pat Richard on the back because the shit he does is actually hard. I was an equity investor in Brave, which in many ways kind of kicked off the crypto ICO nuttiness back 18 months ago, 2 years ago maybe now. And so they were a security browser that had no business model. No VC would touch it because the guy's plan for a business model was sure to get him sued by every publisher in the world. And he's like, okay, I wrote this like ICO thing, so I'll do an ICO for our mobile browser. Like there's no fucking crypto involved in it, but we'll like launch a coin. And it sold out in 2 blocks, which was about 15 seconds, raised like 40 million, and everyone was like, wait, what? Like you can do a what for a thing that isn't actually a coin? They just stuck a coin on it? And I remember reading the report, and the report was like, yeah, it sold out in 2 blocks after like 6 weeks of roadshow through China and Korea and going to all these tech conferences and speaking with all these crypto people. And then we, announced a day for the sale, and we got flooded. And so in many ways, my joke about like the ICO was sold out in 15 seconds, which you hear a lot, is like, well, Facebook did an IPO, and you know how fast that sold out? It sold out in 1 second also. Right? It traded, and it was all done. But like there was like 6 weeks of chicken sandwiches as they went through Milwaukee and Chicago and Berlin and Munich and all these other places doing their roadshow before the, oh my God, Facebook sold $50 billion worth of stock in like 3 seconds. So it is not nearly as easy as it looks. And I was reminded that I was staying in the youth hostel in Zug on part of my tour for one of these, which really sucked. Because you're on a roadshow with all the other nerds in weird pants, going from city to city, pitching your shit. Yeah, actually, I have photos of the youth hostel. Six bunk beds, and I had to pay extra for soap.
I cannot believe you.
It was so good. The fucking taxi from Zug train station to the youth hostel cost more than the youth hostel, because we were on a budget. So it isn't nearly as easy as it looks. On the other hand, it's kind of amazing that you can raise $10, $20 million and you don't even have a product. Like, where the fuck else can you do that? That's crazy talk.
Well, it's funny. I was about to say, those were amazing times. They don't exist anymore.
Really?
So for every founder here who saw an article about token sales and thinks they're going to raise 100 million with a deck, that's gone.
Well, the 100 million was never.
Yeah,
It had to be somebody to raise 100.
Yeah, even then it was like you had resume, but still.
Like a moron could raise 10.
Yeah, a moron could raise 10. That's not the case anymore. It's the people investing now have become more methodical, more professional. I see a lot more money coming from traditional VC and moving here. So this is a true story. I was almost kicked out of, I'm not allowed to say the name of the event, but there's a very famous venture capitalist event, sometimes in Mexico, most of the time in Hawaii, which I've been going to for 10 years. And
Yeah.
I went, and the guy who runs it said to me, hey, Titus, can you just like lead a little breakout session on crypto? We had a couple requests, and I figured like these breakout sessions are usually like 5 people. Everyone else is surfing. The entirety of this conference is 200 people. 180 of them squeezed into a room with me to shout at me and tell me that I was destroying their way of life.
Yeah.
I'm not joking.
I'm a fan of that.
And so I was like, I mean, these are people I've like been begging to take meetings for 10 years, and suddenly I've like all I could think of is my career has ended right here in this room. Like I'm screwed, right? And then without fail, all 180 of them texted me within an hour and said, "Hey, we should have you come by and talk to the partnership about this whole crypto thing." And so the thing about this is that the democratization of the access to capital is really important. And I'm going to give a story of a company that I advised that didn't actually successfully raise, but there's a really interesting point about this business. The company is called Wealth Migrate, which is probably the reason they didn't raise. It sounds like a scam. But it's a pool of guys in South Africa who have for years been pooling capital via a paper angel list process to invest in medical commercial real estate in the US. Now, if you know about real estate, which I don't, but my in-laws do, commercial medical real estate in the US is probably the best asset class of commercial real estate.
What is commercial medical?
It's like basically doctors' offices,
Oh, okay.
because doctors move into their office and they never move, and they always pay the rent until they retire. And then some other doctor moves in there. Like there's zero vacancy, zero, like it is like the perfect commercial real estate investment, right?
Okay.
And so if you live in South Africa, England, Switzerland, much less Romania, Bulgaria, you cannot invest in this asset class because there's 100 guys who build these buildings. They raise the money from the same hedge funds every time, and that's it. It's a closed market. So Wealth Migrate said, hey, we have a seat at that table, but our paper syndicates take too long. What if we did this with crypto and tokenized it? And they got one of these groups to agree to let them do this, and they wanted to tokenize it. And the fact is, it's a great idea. It's too early, but for sure, that's going to screw up a whole bunch of things, starting with the return on capital those hedge funds get on that capital, because no way should it be performing that well. It's too stable an investment. And so this is the thing that's really interesting, is it's not just about moving money across borders or getting past government regulations. It's actually about the valuation of a transaction or an asset in a much more democratized and true market style. And that really gets me excited because, and I mentioned mortgages a lot because I'm thinking about a mortgage product right now. I can't believe I'm going to do another startup, but I am really, really focused on this. The mortgage market is utterly broken, particularly if you have a lot of crypto and no cash. There are some interesting business opportunities.
So, out of curiosity, how many people here, show of hands, own either Bitcoin, Ether, or Litecoin? I just want to get a sense. How many own one of the other tokens? Actually, more than I would have thought. Yeah. Okay. It's actually surprising to me still how hard it is to get some of the other ones. So it's about half. Yeah. It's maybe half or a third.
It's still like a mess.
Yeah, and not to mention, like, I sent somebody some shit token to his Coinbase account, and now it's gone because Coinbase doesn't know what to do with it.
Or not really gone, you just can't get it.
He had somebody at Coinbase who actually said, no, it's gone.